The company on our focus today is Yatra Online with its ongoing IPO, 775 crore rupees public offer that comprises a fresh issue of shares worth 602 crores and an offer for sale of 173 crores. Remember, the IPO was already subscribed to about 11% on the first day, and the bids were largely led by retail investors who subscribed about 55% or zero point 0.5 times, and the non-institutional investors portion also subscribed about 3%. And of course, the IPO, the issue will be open for subscription up until September of 20th. And let's now welcome the top management of Yatra Online with us. Rohan, Mittal, the CFO of the company, now joins in to discuss with us what is the company's future and the plans with the funds that are going to be raised. Very good morning to you, Mr. Mittal. Thanks a lot for taking the time out to discuss your IPO and your vision for the company going forward. First up, I wanted to get a clarification. The last time that you had thought about bringing your IPO, that time you had thought about a bigger issue size. So this time around it has been reduced a bit, as also the price band, which is now at 135 to 142 rupees per share. That was also initially planned at a higher stage. If you could clarify why this downtick, and also now with the proceeds, what are you planning?
Sure. First and foremost, thank you for having us on the show. As far as the size of the issue is concerned, the size of the issue was trimmed to keep in mind the pre-IPO proceeds of 62 crores that came in. So if you look at the total issue size, in 750 crores, we've brought it down to about 602 crores. The intent was to make sure that the pre-IPO proceeds get accounted for, and the balance only reflects the supply, demand, and the market factors that come into play at the time of actual book building. As far as the use of proceeds is concerned, our intent is that a bulk of the proceeds are actually parked for organic growth initiatives. Close to about 150 crores out of the 602 crores that we are raising in primary proceeds. Close to about 150 crores are earmarked for acquisition related initiatives. We've successfully acquired companies in the past and consolidated them. So we believe we can create significant shareholder value by continuing on that trend as we move forward.
Okay.
Mr. Mittal, welcome to Business Today Television. You have our best wishes for a very successful stint, not only with the IPO, but also as far as the listing is concerned. Share with our viewers, how is the top line structured? What is the breakup? And what are the 2 or 3 most important businesses that Yatra Online is in? And where does the bulk of the revenue come from?
Sure. So as far as the company is concerned, we do both B2B and B2C travel requirements of our customers. It's a multi-product offering across the entire gamut of travel and hospitality. So airline, hotels, packages, insurance, visa, cab, train, everything is being offered to our B2B as well as B2C customers. The rough split across B2B and B2C today would be close to about 58% comes out of B2C and 42% comes out of B2B. I'm quoting these numbers on the ticketing side of things, right? At an overall level, we did about 6,740 crores in ticketing value in the last financial year, FY23. And against that, we were able to register an adjusted EBITDA of about 67 crores. On the product, close to about 92% of our ticketing happens on airline, hotels, and packages. And the balance comes through visa, insurance, cab, bus, etc. So that's how the company is structured.
Okay. If you could detail for us what are the margins that you enjoy on the booking of the air tickets, and also is there limited scope for enhancing that margin, since private players like yours are in constant competitive bid to attract viewers to your websites to give competitive pricing on that. So is that a space where you have limited scope to get margins expansion?
Sure. So as of FY23, we were earning about 7.7% on the airline ticketing side and about 13.6% on the hotels and packages side. As far as the margins are concerned, since our business is uniquely divided across B2B and B2C, our earning opportunities, be it airline, be it hotels, is also divided across both. And we do have room for enhancement of these margins. Believe that over the next few quarters, we will be able to demonstrate strong margins as we keep going forward. Our business is not derived entirely out of B2C, as I mentioned earlier, where there can be a requirement for giving discounts and the customer acquisition cost can be a bit on the higher side. As far as the B2B side is concerned, we do see stickiness in volumes and the customer acquisition costs remain extremely range bound. So there are opportunities for us to increase our margins as the volumes grow.
Okay. What
Sir,
would,
let's
yeah. Yes, please,
yeah,
Shell.
yeah. So let's pay attention to your profit and loss account. On a revenue of about 400 crores on 31st March 2023, you booked a profit of just 7.6 crores. And 2 years prior to the current, to the previous financial year, you were in fairly substantial losses, although losses were decreasing. What would be the trajectory of profit from now on in relation to your revenue?
Sure. So if you look at the trajectory, as you've rightly pointed out, we were on an EBITDA positive trajectory for the last few years, but we've turned PAT positive in the last financial year. I think there are important levers which are under play deriving this entire profitability initiative. That includes our payroll, our other expenses, etc. So if you look at my below EBITDA cost items, you'll notice that while my ticketing revenue is increasing, the SG&A cost has not increased in line with that. And the basic reason for that is twofold. One is the back-end process automation that we've driven, which allows us to keep our payroll costs in a very, very range-bound manner. And the second is the adoption of our self-booking tool by our corporate customers, which allows us to again keep our payroll costs on a very, very range-bound manner. So, keeping these two things in mind, we are confident that we should be able to deliver stronger margins as we grow our ticketing volumes over the next few years. The ticketing volumes are growing not only on the back of strong tailwinds in the travel consumption market, but also due to market share growth, specifically on the B2B side. We are one of the largest corporate travel management companies today in the country. And on the back of that, we believe we've created a significant moat which allows us to expand our volumes higher than the market growth rates on the B2B side. So, backed by both these cost initiatives that we've driven and successfully delivered in the past, we believe we are poised to continue to grow our EBITDA margins. Below EBITDA, if you look at the breakup, you'll see that our depreciation amortization cost has been on a downward trajectory because a bulk of the investment that was done in building out our technology has already been amortized. And we believe that by FY25 end, FY24 end, FY25, a bulk of the balance gross block would also have been amortized, which should allow for a significant amount of the EBITDA to actually translate into PBT and PAT thereon. Our interest costs should also remain range bound, given the balance sheet will be much, much stronger in a post-IPO environment. So all of
Okay.
these initiatives combined together should actually deliver a stronger EPS than what we've delivered just now.
Mr. Mittal, if you could also help us understand, you also, when you compare yourself with the peers, Ease My Trip and Make My Trip, on an operating revenue level, there is a wide gap between MMT and yours, also lower than Ease My Trip as well. What is the game plan to enhance the operating revenues to at least reduce that gap between the peers and yours?
See, the businesses that we are comparing are not actually a like-to-like comparison because our competitors derive a significant amount of ticketing value out of B2C operations, while
Okay.
we drive both B2C and B2B almost in a 58-42 split on a run rate basis as of. So I think the operating metrics are not possible to compare on a like-to-like basis. Having said that, we believe that as the ticketing volume grows at a gross level as well as at an EBITDA level, our margins should continue to see an expansion, which should be visible over the next few quarters. And that's something which has been visible over the entire FY20 through 23 trajectory as well, if you look at our quarterly numbers.
Right.
Okay.
Mr. Mittal, I have a related question, of course, for the travel and tourism industry. How do you see this sector performing over the next 2 or 3 years? Not only anecdotal evidence, but a personal disappointment exists whenever we go to a good five-star where there are no rooms available, and whatever is the availability, it's priced so high that it is out of reach of the middle class. How do you see the travel and the tourism industry over the next 2 or 3 years in India? And of course, how do you see the quantum of Indians traveling overseas? Both of them are, of course, your catchment areas in terms of existing and potential customers.
No, you're absolutely right. I think as far as the travel consumption is concerned, we are witnessing absolutely new trends. Uh, any industry report today is quoting the travel consumption market to grow at anywhere between 15 to 20% over the next few years, maybe 5, 7, 8, 10 years, right? Travel consumption is probably in its strongest phase and poised to remain in that phase for the next few years. And there are bulk of reasons actually which are driving this growth. There is a structural change that has happened. If you look at any family or young earning employees, travel is no longer a discretionary spend. You know, that single holiday which has to be planned 6 months in advance, bookings done 6 months in advance. That's not the case anymore. People want to travel at least 2 weekends, maybe out of 4 weekends in a month, right? So both families and youngsters are driving a very, very strong structural change in the way travel is being undertaken. That includes not only the frequency of travel, but also the spend on travel. Uh, Again, there are a few further structural reasons. So if you look at the amount of savings that youngsters are driving today for, let's say, buying a house, it's not much today, right? And their intent is to consume and spend the money on experiences, right? Rather than building fixed assets which get paid out over an EMI of 25 years. So we believe this is one of the strongest reason why the travel consumption market is seeing a very strong demand. On the corporate side, because we service the corporate demand as well, the hybrid working structure is here to stay, right? Earlier, everybody was traveling for every meeting. Then there was a phase when every meeting was happening on video calls. But now I think there is a hybrid structure which has emerged where both the video conferencing facilities as well as travel coexist. And on the back of that, on the back of our economic growth as a country, we are seeing extremely strong demand on the corporate side as well. Both these demands put together are here to stay, if you look at it. As far as the outbound demand is concerned, going to my earlier point of travel consumption resurgence, we believe the entire outbound demand has not even yet come to the fore, and the slowdown in visa processing, etc., were some of the reasons why we believe the outbound demand has still not yet shown its true colors. We believe there is an upside still there as the visa processing timelines come down significantly over the next few quarters. We expect to see stronger demand on the actual outbound travel going forward.
Okay, and what encouragement did you see because of the G20 meeting held about 10 days ago in India? And of course, we are now looking at the World Cup being hosted at least in 10 cities right here. And of course, the long festive and the wedding season, long weekends also, a lot of them coming in towards the second half. Your thoughts on what could that mean to your overall revenues and profits?
I think that just underpins the overall travel consumption demand that we've been referring to. If you look at the Q1 numbers, DGCA has been reporting the airpacks count, and we've seen record numbers of passengers at our airports in Q1, and that is despite whatever fare that was prevalent at that point in time. So post G20, during the forthcoming cricket tournament, etc., we will continue to see strong demand as we grow forward. Uh, we believe that the next few quarters, over the next few years, the demand is not showing any signs of abatement. On the pricing side, since during COVID there was limited hotel room capacity which got added to the existing inventory. But now, as we move forward, we are seeing new hotel capacity coming up. So pricing might see some bit of range-bound movement, but the overall demand should remain strong as we look at it.
Okay. Mr. Mittal, time is running out, and for the benefit of all viewers, I'd like to ask a very important question. Why is it that when we book fares online, especially on airlines, the moment we revisit the site again, the fare automatically jumps. Why is the algorithm always against us? What does Yatra Online do?
So I think I will not be able to comment on the airline websites, but as far as the Yatra website is concerned, such instances would be far and extremely, extremely low count. And the
Yeah.
only reason for that could be that, let's say, if you've selected a trade route or a route which is seeing a high demand, and let's say the booking was not closed in, let's say, 4, 5, 7 minutes, then there is a chance that the suppliers, the airlines, might have updated the fares during that 5, 7 minute period of booking interval, which could lead to a change in fare, right? Other than that, there are no particular reasons. There are no algorithm-based changes that are done, at least on the Yatra website. I'm sorry, I'll not be able to comment on any other website.
No, no. This was a general question marked at the entire industry of airline websites, and I travel very, very frequently, and it's never occurred that the ticket price has actually come down. It's it's one of those things that happens, and we take it in our stride. I'm sure uh, airlines are doing that for whatever reasons that they do it, but such is life. Anyways,
If I may,
congratulations from our side. Yes, sir.
If I
Please
may,
do.
if I may just add as a closing remark, maybe my team can get in touch with your team, and we could perhaps help you with your corporate travel requirement. There, I can assure you that you won't face such challenges. I'm happy to connect subsequently and get that lined up. That shouldn't be a problem.
Absolutely. Actually, Sakshi travels a lot more than me, but she travels for holidays and I travel for work. Nevertheless, we both travel, and we'd be very happy Yatra Online customers, I'm very sure. Thank you so much, Mr. Mittal, for your time. And
Thank you.
we wish you the very best as far as the subscription and listing are concerned. And I'm sure you'll be a regular feature on our show when it comes to quarterlies. Have a nice day.
Thank you so much.
If you like the video, do like, comment, share, and subscribe.